Sure, ma'am. All right. So hello and welcome, guys, and welcome to the session of valuation. And yes, a very interesting session. And this session would not only of your syllabus, but I would also like to tell you that valuation as a subject is not only relevant from your examination standpoint. Yes, of course, it's a 100 marks paper in your examination. And yes, it has got its own merits of being one of the most scoring paper in your CMA final. And I have seen people getting a lot of benefit of set off of both the groups by this particular subject, because it's really, really scoring. But apart from this, from a practical life standpoint, guys, if you are willing to enter into some sphere like investment banking, like private equity, like share trading or valuation of shares, or something like valuation of businesses, IBC is one of the areas where you can enter into. So all these premium areas which are really gaining impetus these days, the only gateway, the only pass through these areas is definitely valuation. So valuation as a subject is definitely an interesting one, definitely a scoring one from your exam standpoint, but also equally important from your career standpoint. If you really want to make it big in your career, then this is the subject for you. And if you have interest in this subject, then there is no limit for growth which this subject can offer you. And trust me, audit, taxation, accounting, all these spheres of the profession are little filled with a lot of people. There's a lot of competition in these areas of work, but this is one area, valuation is one area which is still devoid of a lot of competition, because not many people join valuation stream as their career option. So yes, from that standpoint also, valuation is an important subject. And today I'm going to start with certain basic elements of valuation, and then we will proceed to the higher levels of the concepts. So the first thing that I would like to ask you is, what do you mean by valuation? What is the meaning of valuation, and what do you understand from this word valuation? And many of you would say that, sir, valuation means when we value a particular thing, when we give a value tag to a particular thing, when we ascertain the amount in numerical terms, the amount of a particular thing. So if you will answer this question in this manner, then my cross question to you would be, guys, is there a difference between price and valuation? Because all the things which you have just told me, that to give a monetary number to a particular thing, that thing indicates that you are indicating me towards the price. So do you think there is a difference between price and valuation? What is the difference between price and valuation, and whether it is different? I love, say, eating Maggie a lot. I love atta noodles, and I go to a shopkeeper and tell the shopkeeper that, oh, sir, please give me atta noodles, and I love atta noodles. That guy tells me that, okay, please take this atta noodles and give me 12 rupees. 12 rupees is the price of atta noodles. I take out 12 rupees and give it to him. So guys, this is definitely the MRP of atta noodles, the maximum retail price of atta noodles. And so is this thing relevant to any other thing that you look around you. So the furniture which you are using, the house that you are staying in, the mobile phone which you are using, the laptop which you are using, all these things have got a price tag attached to it. And yes, price tag is a numerical number. Now, my question to you would be, do you think that price tag which is attached to a particular thing is its value? Are both of these things same in parallels, same in their meaning, or is there any difference between these two words, valuation and price? So the first question that I want to ask you is, what is the difference between valuation and price? And yes, many of you can choose to give me an answer that, sir, there is no difference between valuation and price, and both these things are absolutely the same. You can choose to give this answer, but I will tell you my answer in a short while. I just want you to brainstorm for 5 seconds and bring these words closer to your mind. The two words which I am referring to is value and price, and I want to you to analyze these two words from perspective of your common parlance, nothing technical about it. I want you to analyze these words, value and price. Is there any similarity or difference between these two words? So the recorded version will be available on my YouTube, on the YouTube channel of SuperProfs. All right, I'm looking for difference between value and price. So Manpreet says value is more important than price. But Manpreet, what is the difference between value and price? Sir, price is paid something. What is the difference between value and price? Okay, I now hereby close the chat box and let me analyze this for you. Let me analyze the difference between value and price for all of you. And yes, there is a difference between value and price, and there is a huge difference between value and price. Value and price are not equal to each other. Value and price have a different connotation altogether, have a different meaning altogether, and both of them can be understood in different parallels. Both of them have a different meaning to it. So, but what is the difference between value and price? So, sir, to extend your example, if my mobile phone costs me 15,000 rupees, if I ask someone what is the value of this mobile phone, then people will tell me, okay, mobile phone is for 15,000 rupees. That is how it is priced at. So, sir, price is equal to value. What is the difference between value and price? So let's move on to the answer of this question. The first question, which is is there any difference between value and price? To analyze this particular question, let me go to an example, which is a theory which is given by one of the famous economists, Mr. Adam Smith. So this is the theory of Mr. Adam Smith to understand the difference between price and value. Guys, you can see two images on my screen. What are these two images? This theory is known as the diamond paradox. So what are the two images which you can see on my screen? The first image is of a diamond, a cut diamond, and seems to be a very costly diamond, a heavy carat diamond, which is of a fine color. And yes, it is an expensive thing. Diamonds are very, very expensive. And on the right hand side of the screen, you can see a glass of water. These are the two commodities which I am going to deal with in my example to make you understand what is the difference between price and value. So guys, you can see two things. Thing number one, diamond. Thing number two, the glass of water. So now my question to you would be, please tell me which one is more expensive, which one is more pricey, which one will cost you more? Sir, what a lame question is it? Of course, diamond will cost us more. Diamond is very, very expensive. And if you go for fine diamonds, say if you go for 2 carat diamond, 1 carat diamond, 3 carat diamond, they will cost you in lakhs and lakhs of rupees, depending upon their color and clarity. So it's the most expensive thing which is there on earth. Diamonds are one of the most expensive things. And some water, water is available for 20 rupees for 1 liter. And in Delhi, so the water is almost for free because Delhi government doesn't charge for water. So water is negligible in cost. So water is not pricey. Diamond is very, very expensive. Is it correct or is it incorrect? Yes, sir, it's absolutely correct. Diamond is very expensive and water is quite inexpensive. Now, my second question to you would be, guys, all of you are in a desert, are absolutely lonely, are absolutely stuck in a desert. Hot waves are moving all around you, and you do not see any end of this desert. I give you an option to choose one of the two things. I'll give you a very expensive diamond and I'll give you a glass of water. What will you choose? Obviously, sir, glass of water. Okay, forget about desert. Desert is an extreme situation. Forget about desert. We all of us are home logged, are quarantined. In this coronavirus situation, we all are in our homes logged. For some of the areas, it's also sealed. So police is traveling around our homes, and they are penalizing us if we are stepping out of our homes. So guys, in this quarantine situation, in this absolutely difficult situation, suppose if there is a water crisis in the country and you do not get sufficient amount of water, touch wood, I hope nothing of this sort happens, but if suppose there is a water crunch in the country and you have very minimal water at your home, you can barely fulfill your drinking needs from this particular water. If you have bare minimum water at your home, then guys, please tell me, in this difficult situation, will you choose, if I give you a choice, will you choose a diamond or water? Of course you will choose water, because water is a necessity. Water is necessary for your survival. Without water, you can die. Without water, you cannot survive. Water will give you benefits which diamond cannot. Diamond can only be worn as an ornament. If you are not left with your life, where will you wear diamond? So diamond is only relevant when you are filled or when you are satisfied with the basic necessities of life. Water is the basic necessity of life. So now you've answered a question of mine. Your question, my question was, which is more expensive, water or diamond? Which is more pricey? Diamond is more pricey. Diamond is more expensive. Now my second question to you would be, which is more valuable? Which thing will give you more benefits? Which thing is more valuable? Now what is your answer? Which thing holds more value? Of course, water holds more value. Water is more valuable for all of you, because without water you cannot survive. Without water your existence will be at stake. So water is more valuable. So now the minute difference which is arising out of this conversation is that, guys, value is something which derives benefit for you. So valuable is a thing which is beneficial for you, and price is a thing which you paid a price for a thing, and price is a intersection of demand and supply which is there in market. So why are diamonds so expensive? They are so expensive not because they are very, very utilitarian. They have got a huge benefit. They've got a huge utility. That's not why, because diamond is very expensive. Diamond is expensive because the demand supply intersection is somewhere leading to a abrupt situation, somewhere leading to a disequilibrium, because of which diamond is very, very expensive and water is quite inexpensive, because water is widely available. Water is not scarce. However, diamond is scarce. So when I talk about price, guys, price is a function of demand and supply of a particular commodity. However, when I talk about value, value is a function of the benefits that you derive from this particular commodity or this particular thing. So let me come back to my original example of Maggi. Guys, I love atta Maggi and I eat atta noodles a lot. And those noodles are very easy to make and easy to have. Now, what is the price of atta Maggi? What is the price of atta noodles? The price is 12 rupees. I told you it's a 12 rupee package, which is purchased by me. Soon as that packet is arrived at my home, my mom starts scolding me. My mom tells me, "Oh, this is rubbish. What are you eating? This will harm your body more than it will benefit you. There's no benefit of eating it. There's no advantage of eating it. It is very, very harmful for your body. And why are you eating it? Eat something healthy. Eat apple, eat banana, eat mango, eat fruits. Why are you eating Maggi?" So guys, from my mother's standpoint, please tell me, what is the value of Maggi? The value is zero, because it is giving no benefit according to my mom. It's giving no benefit. But the price of Maggi is rupees 12. So that is the difference between price and value. Guys, value is derived from the benefits which are received by using that particular product. And the price is derived from the intersection of demand and supply of a particular product. So if demand and supply curves intersect at certain point in time, that is the point at which the price of a particular commodity is determined. So this is the famous diamond paradox, which makes you understand the difference between price and value. And it is propounded by Adam Smith. And what does it say? It says that diamond is highly priced. The price of diamond is high and its value is low. Its value is low. However, in case of water, water is priced at a lesser rate and its high. Why is it value high? The value is high because we derive a lot of benefit from drinking water, and water is the basic necessity of life. So according to Warren Buffett, have you heard this name Warren Buffett ever before in your life? No, sir, we haven't. So most of you would have, definitely. I know most of you would have, but those of you who don't know Warren Buffett, guys, Warren Buffett is the market leader in investment banking, and he has been investing since a very long time. And he's a millionaire, multi-millionaire, who's investing into stocks and shares of the company. He predicts the movement of these shares of the company, and he would invest in the profitable company, and he derives the profits from investing in shares of a different company and makes profit out of it. So Warren Buffett is known as the father of, or the god of, investment banking in the world. So entire world worships Warren Buffett, and his books are very, very good. If you really have interest in stock markets, investments, mutual funds, investment banking, private equity, angel investors, angelists in India, any of such topics, if they excite you, if you are really interested in studying all those subjects, Warren Buffett is the man for you, and his books are really amazing. So Warren Buffett describes this paradox as price is what you pay and value is what you get. So I paid 12 rupees for my Maggie, but what value did I derive? From my mother's standpoint, I didn't derive any value. Guys, keep aside the Maggie example. You must have many a times felt some pinches in your impulsive buying strategy. Impulsive buying. What is impulsive buying? Impulsive buying is when you just like something which is kept on a show window and you buy it impulsively. You said, oh, this is very good. I think this will be very useful for me, and you buy it. And once you bring that thing home, then you realize that, oh, I think I don't have any use of this particular thing. It's a waste for me. Does it happen to you? Sometimes this happens to you. So this is again a price and value paradox. You have paid a price for a particular product to your home. You have made investment in that product, but soon as that product reaches your home, you realize that it was an impulsive buying. Price was paid, but value will never be derived from this particular product. It's a waste for me. This is again an example of price and value paradox, which is popularly known as the diamond paradox. And the diamond paradox explains the difference between price and value. Now, my question to you would be, we over here in SPM BVM, paper number 20 of your group 4 CMA final, we over here are concerned with price or with value? What are we concerned with? Are we concerned with price or are we concerned with value? Guys, we are concerned with value. So those of you who feel that, oh, SPM BVM is about economics, SPM BVM is about demand, supply, pricing, all those things. No, SPM BVM is not about demand, supply, pricing. SPM BVM is not about pricing at all. SPM BVM is only about value. I will look at the value which is derived from a particular product. I will look at the benefits which are derived from a particular product. I will not look at the market forces at all. I will not look at the demand and supply of a particular product. Valuation is not about economics. Economics has nothing to do with valuation. We won't study the demand curve, the supply curve, the marginal cost curve, etc., etc. In this subject, we are not going to study any of that thing. We are going to study the benefits which are derived from a particular product. How can we value? Okay, so here's water for me. And yes, as I've told you that water is very essential for our body. So I'm drinking water. Guys, I drank water. Can any one of you tell me, in monetary terms, how much value will I derive from drinking this quantity of water? How much value did I derive from drinking this quantity of water? Can someone of you tell me the value of benefit which I have derived from drinking this amount of water. Because guys, in this subject, what are we hinting at? We are hinting at the value and not at the economics, not at the price, right? So we are hinting at the value. So how will we determine this? How will we determine that how much value in monetary terms have you derived from drinking this much water? How can you measure it? Sir, is it possible to measure how much value in monetary terms have you derived? Yes, guys, it is possible to measure how much benefit did I derive from drinking that much amount of water in monetary terms. And that is what we are going to study in this subject called business valuation. Business valuation can value about anything and everything that gives us benefit. The prime condition of valuation is that a thing should have some potential of giving us benefit. If a thing has potential of giving us benefit, I can value that particular thing. This is the underlying principle of valuation. So if you give me anything, you give me a mobile phone, you give me a pen, you give me a laptop, you give me anything. If you think that it is deriving benefit, I am deriving benefit out of that thing, or you are deriving benefit out of that thing. If you think that, I can value that. We have techniques to value it, and we will value it in our subsequent lectures. One thing that we are not going to study in this lecture, because now I've told you what are we going to study. Now I'm telling you what are we not going to study. Guys, we are not going to study accounting standards in this particular lecture. There is no law which has been made in the country or even in the entire world which can precisely tell you how to value a thing. There is no precise measurement of telling you how to value a thing. It's all about your experience. It's all about various models which we are going to study in valuation process, and it's all about your comfortability factor with a particular model that we are going to choose. There is no law. So we are not going to study law. We are not going to study sections. We are not going to study provisions. We are not going to study standards. We are not going to study any rules, any regulations. No, we are purely and purely going to study valuation. And valuation means anything that can give me value, anything that can fetch me value. That is valuation. That is valuable for me, and valuable thing will give me valuation. So yes, this has set the context of the chapter valuation, basics of valuation. Let us move on to the next topic. And the next topic of by the popular vote. So I had asked all of you which chapter would you like me to take, because there are so many chapters and they are all important and big chapters, guys. So you all told me, most of you told me that, sir, let's start with mergers and acquisition chapter. Yes, the most important chapter of your syllabus. In the last examination in December 2019, this chapter was appearing for about 25 to 30 marks. Guys, in every attempt, this chapter holds a minimum of 20 marks, minimum 20 marks. This has been coming in the examination all across, all through, since ever I have started teaching. So I've taught for past 8 years, and for past 8 years, this chapter has been coming in continuously. In recent past, in 2016 syllabus, especially, this chapter has gained impetus and it has been appearing for a very high percentage in the past examination. So yes, according to your choice and according to the demand of the situation as well, I chose to pick up this chapter. This chapter is known as valuation of mergers and acquisitions. So first of all, you need to tell me, what do you mean by mergers and acquisitions? Guys, in this competitive world, the world is so competitive. Every company is fighting for profits. Every company is fighting for survival. Every company wants to become a better company as compared to its competitors. Every company wants to satisfy its customers more than its competitors. In this cutthroat competition scenario, guys, there is a very, very big probability that you run into losses, or you are not performing as well as you should have been performing. If you enter into that zone where you are not performing well, where your profits are not good enough, then the options left with you is to either close down, shut down, or to merge with another company. Because better than shutting down, it's better to merge with another company, better to synchronize with certain another company that will derive synergy for all of you, that will derive benefit for all of you, and then holistically you can move forward in your business setup. So many companies in India, especially in India, in last 5 to 10 years, guys, there has been upsurge in the companies who are looking for mergers and acquisitions. And I, hailing from a big four background, I have now given tax advisory on several mergers and acquisition deals which have happened in India. And both the parties, the buyer as well as the seller, are too intricate and too particular to know what are the intricacies, what are the refinements which are required to be done in mergers and acquisition deal, what price should be paid for the selling company, how much shares should be issued, etc., etc., etc. So it's a big deal in India, at least at this point in time, where the Indian economy is booming. Of course, we have to wait and watch after Corona how does the economy unfolds. But leaving Corona aside, mergers and acquisition has been the most important and most popular aspect of the Indian economy for past 10 years. This is a measurement tool. This is a tool whereby the companies who are at the verge of closing down, or the companies who are not going well, so a company which is not growing, which is stagnant, is also equivalent to loss-making company. Because if you are stagnant and the prices are shooting up, the inflation is shooting up, then you are actually declining, you are not stagnant. So you have to grow at a steady pace, at least to the tune of inflation rate. Only then can I tell you that you are a growing company. And if you're not, if you're facing difficulties, then guys, mergers and acquisition is a good opportunity for all those companies who are not working fine. They can just go ahead and sell their assets and liabilities to a person who's willing to buy them. And the valuation that will surround this particular deal is known as valuation of mergers and acquisition. And yes, by far the most important chapter of your syllabus. It holds a very crucial marks in your examination. Okay. So I have a question for you. I have a simple question for you. Just look at the screen. Golden rule of mergers and acquisitions. So before we come on to the golden rule of mergers and acquisition, I want an answer from you. Please tell me, what is 1 plus 1? Is it 2 or is it 3? What is 1 plus 1? Vamshi says it is 11. Vamshi, we are not in a philosophy class. Had we been in a philosophy class or a psychology class, then yes, 1 plus 1 is equal to 11. That's the high Josh which I'm expecting. That's perfectly fine. But we are in a valuation class. So in valuation class, we cannot be philosophical. So 1 plus 1 is equal to what? Huh? What's wrong with you guys? Aditya, Akshay, 3. Have you not studied basic mathematics in your class 2, class 1? 1 plus 1? Where does 1 plus 1 is total as 3? Everywhere 1 plus 1 is total as 2. What's wrong with you guys? What is 1 plus 1? A simple question to all of you. What is 1 plus 1? 2. Yes, Sushma Kulkar. Yes, 2. It's not maths. Arey, it is maths. Jay, it is maths. 1 plus 1 is equal to what? Okay. Why this suspense? Why this question answering at this point in time? Because we are going to study one of the most important rules, one of the most important principles of mergers and acquisition. And that principle will form a basic of how will we look at mergers and acquisition deals. So guys, the golden rule of mergers and acquisition, I'll ask you a simple question. What is 1 plus 1? Sir, mathematically, 1 plus 1 is equal to 2. You are absolutely correct. Mathematically, 1 plus 1 is equal to 2. But guys, in a valuation class, this is incorrect. In a valuation class, this is incorrect. Under valuation principles, 1 plus 1 is not 2. Under valuation principles, 1 plus 1 is at least 3. It can be higher than 3 also, but at least bare minimum, it has to be 3. It cannot be 2. 1 plus 1 is not 2. 1 plus 1 is 3. In a valuation concept, it's a mergers and acquisition concept, and 1 plus 1 is equal to 3. 1 plus 1 is not 2. So, now we are doubting your teaching skills. Sir, have you been to primary class, first class, second class, nursery class? So parents are in the next room, should we call our parents and to tell them that what is sir teaching? Look at this. Sir is saying that 1 plus 1 is equal to 3 and 1 plus 1 is not equal to 2. No, no, guys, relax. You need not tell all these things to your parents. You have to just learn what I am teaching you. And this is relevant only and only for the valuation class. So tomorrow, if your mom asks you, please tell me how many apples are there inside fridge, you will say 1 plus 1 is equal to 3. No, you cannot say 1 plus 1 is equal to 3. At your home, these principles will not apply. Class. Okay, sir, please explain how is 1 plus 1 equal to 3 and not 2. Please understand this concept, guys. I have two companies, company A, company B. Company A is turnover. Company A is profit. Okay, let's talk about profit. Company A is profit, 2 crore rupees. Company B is profit, 3 crore rupees. Company A is profit, 2 crore rupees. Company B is profit, 3 crore rupees. Total profit after mergers and acquisition, 5 crores. 5 crores, 2 crore plus 3 crore. 5 crore is the profit after merger. 5 crore is the profit which is derived by both the companies together. So after merger profit is 5 crores. If after merger price is 5 crores, do not enter into this deal. This is a flop deal. This is a loss-making deal. Why, sir? Guys, why would someone enter into a merger and acquisition deal? Someone will enter into a merger and acquisition deal to reap benefits. If both the companies who are working together are same as what they were working separately, what is the use of such merger? There is no use of such merger. There has to be some additional benefit which is accruing to the shareholders of both the companies, which can motivate you to enter into this merger and acquisition deal. Naturally, guys, things like efficiency of large scale production. If you produce something in large scale, then do you get efficiency? Do you get benefits? Yes, sir. Our bargaining power increases. So to give you an example, if I buy 10 kgs of raw material, it will cost me 4 rupee per kg. But if I buy 20 kgs of that raw material, guys, what is the price which I can negotiate with the vendor? I can negotiate a lesser price. So all over, the price per unit and the total price costing will reduce. And these two companies would have separate costing managers, separate finance managers, separate HR managers, separate everyone. We can chuck out one set of management level when these two companies merge together. We need lesser people. Our HR cost will reduce. Our infrastructure cost will reduce. Our plant and machinery maintenance cost will reduce. Many other costs will reduce if these companies are merged together. So guys, merger should entail some benefit. If merger doesn't entail any benefit, then there's no point of doing that merger. In fact, if the profit which is earned by the merged companies are same as what they are earning individually, then it's a loss-making proposition. Why? Because in the merger process itself, you will spend about 20 lakh, 10 lakh rupees. You have to give some money to the consultant. You have to give some money to the lawyers. You have to give money to court fees. There's several level of expenditures which you'll incur. So if 2 crores and 3 crores is 5 crores, no need to enter into this merger and acquisition deal. The situation should be that 2 crores plus 3 crores should at least be 6 crores to enter into this merger and acquisition deal. So there should be some benefit which is arriving out of a merger and acquisition deal, and that benefit should be reaped by you. If there is no benefit which is reaped by you, then please forget about this merger and acquisition deal. Do not enter into this merger and acquisition deal. Please sit at your home, do your businesses separately. There is no point in entering into this particular deal. So the first principle and the golden principle of mergers and acquisition is that 1 plus 1 is not 2. 1 plus 1 is 3. And the third element, 1 plus 1, what is the third thing which we get? The extra one which we get is known as synergy benefit. Synergy benefit is known as the extra benefit which is arrived at by combining two firms together. This is known as synergy benefit. And merger and acquisition deal has this unique principle of having synergies with respect to their profits, with respect to turnovers, with respect to reduction in expenditure, etc., etc., etc. So synergy benefit is the first and foremost thing which we will look forward to in our merger and acquisition deal. And guys, going forward, you will always, whenever someone will ask you what is 1 plus 1, you will always say 1 plus 1 is equal to, no, not 2. No, not 3. Someone else in the valuation class, 1 plus 1 is 3. But if someone else is asking you, then what will you say? 1 plus 1 is equal to 2. Because otherwise people will think that you've gone mad, you've gone bonkers, you've gone crazy. So if someone else is asking you what is 1 plus 1, you will say 2. But for the valuation class, if someone asks you what is 1 plus 1, then what will you say? 3. In valuation of merger and acquisition, 1 plus 1 is equal to not 2, but something more than 2. It can be anything above 2. And this anything above 2 is known as the synergy benefit, because of which our merger and acquisition deal is useless. I am not willing to enter into such merger and acquisition deal where the synergy benefit is 0 or where the synergy benefit is negligible. However, guys, still there are certain deals because of some non-monetary consideration like ego, like willingness to acquire someone else, like enmity. Sometimes you enter into a deal in which synergy benefit is 0. Sometimes this happens. So in your ego, in your show off of power, if you want to show off your power, you want to acquire a company because it's your ego to acquire that company. In certain circumstances, non-monetary considerations, it may so happen that you acquire a company where 1 plus 1 is equal to 2. You acquire that company. And guys, if we talk about non-monetary considerations and if we talk about egos, then there can be another situation where 1 plus 1 is equal to 1. You can acquire a company which is a company which is earning 1 rupees of profit, but you are very sure that in future this company is not going to earn anything. Still you make a wrong decision and still you merge that company with yourself. So 1 plus 1 is equal to 1 is another option which can happen, but again, a non-monetary option. And we are not discussing about non-monetary things in this chapter. We will purely focus on the monetary things in this particular chapter. So before moving any further, let me see if you have any questions. Let me answer to your questions. If you have any, you can ask your questions, but short questions, not very detailed questions. So please tell me if you have any questions still here. Otherwise, I'll move to the next topic of the chapter, mergers and acquisitions. Economies of scale. Yes, Vamshi, that is a perfect word. Economies of scale is the word which is used for describing synergy benefits. Synergy benefits are derived from economies of scale. Yes, absolutely. What is the difference between value and price is important in this lecture. So why is difference between value? No, in this lecture, the difference is not important, but for you to understand that what is valuation and where does valuation come from, it's important because going forward, we will arrive at value. Then I don't want you to confuse between value and price, because question will try to confuse you with value and price. It will try to tilt you towards price, but you don't have to tilt towards price. You have to focus on value. That is why I had explained the concept of value and price in the starting of the chapter. Please explain cash consideration, cost of merger. Okay. Cash consideration, cost of merger. Shruti, this topic is not being covered by me in this particular lecture, but definitely I'll take some lectures where I'll cover this topic, cost of merger. It's an important topic. Okay, so I'm moving forward. Guys, next topic which I'm going to start in the chapter mergers and acquisition is the swap ratio. This is an important topic and a very basic topic, a simple topic, which mergers and acquisition swap ratio, guys, is to be understood in just one word. And that one word is negotiation. What is swap ratio? What is benefit of swap ratio? I'll solve some sums in the class and I will make you solve those questions. That is perfectly fine. I'm not talking about the practical aspect of it. I'm just asking you to understand what do you mean by swap ratio. Guys, swap ratio means negotiation. And guys, the art of negotiating and negotiation art and the art of price negotiation is pioneered by the females of the country. Yes, including my mom. I am proudly acclaiming my mom as the negotiation queen of this world. She negotiates so firmly and so fervently that you would be surprised at what rate does she negotiate. So negotiation is definitely an important element of all of us. But yes, females pioneer in this art of negotiation. What is negotiation? In Mumbai language, negotiation is known as mandwali, and that mandwali is swap ratio. So whenever you go to a shop with your mother or with your sister, guys, they would start negotiating in such a manner that you will be surprised. What will they do is they will pick up a thing which they like, and they will highlight all the negative points of that particular thing to the shopkeeper. They will say, oh, this is looking good, but its metal is not that its material is not that strong, its color is fading. I mean, we need a brighter color. The color is fading, I think. This will not match with every dress. So I think we need something which that will match with every dress. This is not that worthwhile. They will highlight all the negative points of that particular product to the shopkeeper. And to your surprise, they will purchase that particular piece only. This is a way of negotiating. They negotiate in a negative way, and everyone negotiates in a negative way. So if you like a thing, and if you want its price to be lower, and lower, if you want it to be really cheaply priced, then what will you do? You will negotiate it. You will highlight its negative point. You will try to suppress the seller. If you suppress the seller, then definitely seller is going to be demotivated, and seller might sell that good to you at a lower price. Yes, guys, exactly this art of negotiating, which is pioneered by us. This art is reflected in the concept of swap ratio. Let us take a real life example of the swap ratio, and let us take two companies, company A and company B. The details of these two companies are given in front of you. Company A is the bidder company, which means the buying company, the company who's buying the other company. And the seller company is company B. Company B is selling off its assets. So company B is the target company. Now, guys, the consideration which is to be paid to the company B. So company B is selling to company A. The consideration which is to be paid is not in cash. The consideration is only and only to be paid in shares. So company A will tell company B, listen, company B, give all your assets and liabilities to me, and in return, take my shares. Leave the management of the company, take my shares, and this company will be my company. Company B's shareholders are lured. Company B shareholders would say, okay, we'll take your shares, we'll take company A's shares, and we'll have that share, and the assets and liabilities will be given to company A. So this is the deal which will happen between company A and company B. Shares of company B will be given to the company A, and the assets and liabilities of company B will be given to company A. Shares of company A will be given to company B. Shares of company A will be given to company B, and assets and liabilities of company B will be given to company A. So I'll make two arrows. Arrow number 1, this represents the shares, and arrow number 2, this represents the assets and liabilities. So company A will give its own shares to company B. So company A has its own shareholders. It will have additional shareholders in the form of company B shareholders. Company A will give its shares to company B, and company B will give its assets and liabilities to company A. This is the deal. This is the quid pro quo which will happen between company A and company B. Now, the question is, company B has 5,000 equity shares. Company B has 5,000 equity shares. Company A has 10,000 equity shares. Now, company B's shareholders will be looking for shares in company A. So what will company B shareholders tell company A? Company B shareholders will tell company A, oh, company A, listen, we have 5,000 shares. You give us your 50,000 shares. Company A will be astonished. Company A will say, oh, what are you saying? 50,000 shares out of your 5,000 shares? You do not even deserve 1,000 shares of my company against your 5,000 shares. So this is the conflict. Guys, company A shareholders will demand higher value of number of shares in place of their shares. So in place of 5,000 shares of company B's shareholders will say, give me higher number of shares. And company A shareholders will be lured to give lesser number of shares to company B. Yes, this will happen. This is a usual merger and acquisition transaction which will happen. So now negotiation will happen, and see how negotiation will happen. So guys, company B will ask company A that, okay, company A, you please give me more than 5,000 shares in your company. Company A will say, oh, just look at your NAV. Company B, look at your NAV. You are so behind us. 210 is our NAV. Your NAV is 150. Why should we give you more number of shares? And company A will also say, okay, look at your NPS. You're so cheap. You're only 36 rupees. We are 42 rupees. We are expensive than you. How will you justify more than 5,000 shares in our company? Your shares are 5,000. Their market price is 36. We won't give you higher number of shares. We'll give you lower number of shares. You don't deserve more than 5,000 shares. And then in return, company B will highlight to company A, okay, you are seeing NAV and NPS. Please see EPS also. In EPS, I am the winner. In EPS, it's the value is 5, earnings per share is 5. So if earnings per share is 5, then of course I deserve better amount of number of shares. So give me higher number of shares. So guys, in this entire transaction of company A versus company B, definitely there'll be a fight. There'll be a conflict. And guys, in this conflict, company A and company B will definitely fight with each other. Soon as they will fight with each other, there is going to be a solution to it. So the solution is, okay, company A will ask company B, acha company B, you tell me how much shares do you deserve? Company will highlight earnings per share. Guys, I'm not talking about P ratio deliberately as of now, because P ratio is a different consideration altogether. I'm not talking about P ratio as of now. I'm only talking about these three factors. So company B will tell, after looking at the EPS, and company B will harp upon the EPS because EPS is higher in case of company B. Company B will tell company A, listen company A, in place of my 5,000 shares, you should give me, now these shares multiplied by 5 divided by 4. So my 5,000 shares are giving me an earning of 5 rupees per share. So 25,000 is the total earning which I am deriving from my shares. If I join your company, then you will give me an EPS of rupees 4. If you will give me EPS of rupees 4, then how many shares do I deserve? 5,000 multiplied by 5, 25,000 divided by 4. I deserve 6,250 shares out of my 5,000 shares. So you give me 6,250 shares so that I am neither at a loss nor at a profit. I am at an equilibrium situation. Mr. A hears to Mr. B, and Mr. A tells Mr. B, listen, Mr. B, okay, you've talked about EPS. Now let me talk about the other two variables. The other two variables are MPS. Look at the MPS. So if we talk about MPS, then 5,000 shares multiplied by your price is 36, my price is 42. So according to this calculation, what do you deserve? You deserve much less than 5,000. You deserve 5,000 multiplied by 36 divided by 42. You deserve 4285 only. You don't even deserve 5,000 number of shares. You deserve only 4285 number of shares. So I'll give you lesser amount than lesser shares than you already have in your company. And Mr. A also highlights the negative point of Mr. B, company B. What is the negative point of company B? Negative point of company B is NAV. Mr. A will tell company A will tell company B that, look, if we talk about NAV, then the shares which should be given to company B is NAV 5,000 multiplied by 150 divided by 210. So 5,000 multiplied by 150 divided by 210. You deserve only 3571 number of shares. Company B, you don't even deserve 5,000 shares. You deserve only 3571 number of shares. Sir, now please tell us, how would this fight end? Guys, the similar way the fight ends at your home with your mother, with your sister, the same way the fight will end over here. Negotiation. There is no right way to end the fight. It's only negotiation. It's your word over my word. So as a valuer, I don't want to find the conclusion of this negotiation. I don't want to find the ultimate answer of this negotiation. I don't want to find. As a valuer, My responsibility is just to keep all the possible options on the plate of seller and the buyer. Then seller and buyer will choose a most appropriate option. There is nothing right, there is nothing wrong. They will decide upon the best method to exchange shares. Negotiation will happen between them. We are out of it. We as an investment banker, we as an investment expert are out of it. Our responsibility as an investment banker is just to suggest the alternative ways of computing the swap ratio. So guys, what is the swap ratio in this entire concept? This division and multiplication is the swap ratio. So if I compute the swap ratio on the basis of EPS, it becomes the EPS of company B, that is the target company, divided by EPS of company A, that is the bidder company. If I compute the swap ratio on the basis of MPS, then the formula is MPS of company B divided by MPS of company A. If I talk about NAV, net assets value, then the formula of swap ratio is NAV of company B, which is the target company, divided by NAV of company A. So let me come on to the formula of swap ratio. Guys, formula of swap ratio is NAV oblique MPS oblique EPS of the target company divided by NAV oblique MPS over EPS of the bidder company. This is the formula of the swap ratio. Now we move at the last element of this ratio, swap ratio, which is the PE ratio. Sir, why didn't you discuss the PE ratio before? Why did you keep a suspense on the PE ratio and you are highlighting it now? Because guys, the formula is different when you compute the swap ratio on the basis of PE ratio. It's absolutely different. So what is the formula? Let's see the formula first. So in case of NAV, MPS, EPS, target company is in the numerator. Bidder company is in the denominator. Guys, in case of PE ratio, bidder company is in the numerator. Target company is in the denominator. So the formula for PE ratio is absolutely reverse. It's absolutely reverse. Sir, why does this happen? Okay, let's come on to the reason. Why is the PE ratio, swap ratio different from any other swap ratio? Why is PE ratio, swap ratio different? Guys, the difference is that for all other measures, all other measures means NAV, MPS, EPS, all these three measures, higher the ratio, better it is. Which means if someone has a NAV of 210, then of course it's better than NAV of 150, because NAV of 210 signifies that you have considerable amount of assets at your disposal. Guys, MPS of 42 tells you that, okay, your market standing is very, very good. Your market capitalization is good. So 42 MPS is better. In case of EPS, if you have 5 EPS, it's better. Why is 5 EPS better? Because it signifies that your earnings are better. So higher the ratio, better it is. So in terms of NAV, who is at a favorable situation? Guys, in terms of NAV, A is at a favorable situation. In terms of MPS, who's at a favorable situation? A is at a favorable situation. In case of EPS, who's at a favorable situation? B is at a favorable situation. But in case of P ratio, guys, P ratio, lower the ratio, better it is. Sir, how come lower the ratio, better it is? I'll give you an example. So assume that you have two companies, company A and company B. Company A's EPS is 2, company B's EPS is also 2. Company A's MPS is 10, company B's MPS is 12. So guys, a simple mathematics. For earning 2 rupees, you have to invest 10 rupees in case of A. For earning 2 rupees, you have to invest 12 rupees in case of B. That is the simple mathematics which we are arriving at this point in time. So if you are a rational investor, if you are an intelligent investor, which company would you want to invest in? So we would like to invest in company A, because in case of company A, the investment is lower. 10 rupees we have to invest. And how much are we earning? We are earning 2 rupees. So we will invest in company A because company A is lesser expensive than company B. So company A, we have to invest 10 rupees. Earning is 2 rupees. So company A is better. Absolutely, guys. Company A is better. Now, please tell me, what is the P ratio of company A versus P ratio of company B. P ratio is MPS over EPS. P ratio of company A is 5. P ratio of company B is 6. So guys, hence proved, in case of P ratio, lower the P ratio, better it is. If lower the P ratio, better it is, then guys, the swap ratio formula is also reversed. Swap ratio formula will have bidder company in the numerator and target company in the denominator. Now, let us come back to our equation. The details given to us is P ratio is 12, P ratio is 8. Now, please tell me who is at a favorable situation. Yes, company B is at a favorable situation. If guys, company B is at a favorable situation, then tell me, should the number of shares which are issued to company B shareholders be higher than 5,000 or should they be lower than 5,000? I'll take some answers over here. You just have to tell me higher or lower. In case of P ratio, company B shareholders are at a better position. So the number of shares should be higher than 5,000 or should they be lower than 5,000? Absolutely, guys. You are right. Many answers are coming to me. Higher, 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 higher. Perfect. Yes, guys, they should be higher. So we should get more than 5,000 number of shares. We shouldn't get less than 5,000 number of shares. And if you want to get more than 5,000 number of shares, then of course your numerator should be higher and denominator should be lower. And numerator is higher in case of P ratio of company A, which is the bidder company. So 5,000 multiplied by 12 divided by 8, 7,500 is the number of shares, which in this case should be given to the company B shareholders. And that is how, in case of P ratio, guys, lower the P ratio, better it is. So the formula of swap ratio is reverse. The formula of swap ratio is P ratio of the bidder company divided by P ratio of the target company. And the normal swap ratio formula is, NAV oblique market price per share oblique EPS of the target company. So numerator is of the target company divided by NAV oblique MPS oblique EPS of the bidder company. So these are the two formulas which we'll be using in our class for determining the swap ratio. If the question gives us to compute the swap ratio on the basis of NAV, MPS or EPS, we'll take one of these methods. And if the question asks us to give PE ratio, we'll take PE ratio. But sir, if question comes, then which parameter should we take? Which parameter is best? Number of to calculate the new number of shares. NAV, MPS, EPS, PE. Which parameter is the best? Guys, let me reiterate. Nothing is best. Nothing is worse. It depends on the negotiation. You don't know which way would negotiation fall in when you go with your mom to shop for shopping. Similarly, you don't know, you never know which way will this negotiation end up between the buyer and the seller. You are just a valuer. In your question, it will be given to you according to which method do you have to calculate the swap ratio. You will have to use that method and you have to compute your answer. However, in my study material, I will make you do one question in which I will make you choose the best method out of the options which are available. I will teach you how to choose one of the best methods amongst the options which are available. However, from an exam perspective, guys, the question will specify which method is to be chosen, whether it is NAV, MPS, EPS or PE ratio. So yes, that's all for today's session. And I'm open to questions. If you have any questions, then you can let me know. And guys, before we sign off, let me tell you that the next session is planned for tomorrow. And tomorrow also we have a session on BVM, which again will be live on SuperProfs YouTube channel and on this Zoom call as well. So any questions, any parting questions? Exchange ratio and swap ratio are same. Absolutely, Sushma. Exchange ratio and swap ratio are absolutely same. There's no difference between exchange ratio and the swap ratio. Okay, Vamshi says weighted average. Vamshi, it's about the seller and the buyer. It is their decision. It is not our decision. So they might choose simple average. They might choose one of them. They might choose weighted average. It's their wish. It's not our wish. It is entirely upon the two parties. How many sessions for this chapter? Himanshi, not sure as of now. So SuperProfs is arranging for these sessions. So according to the slots which I get for from SuperProfs, I will arrange the chapter sequence. I want to cover the major parts of these chapter first. So I will arrange according to the slots given to me. If the question doesn't specify any method, Sushma, there cannot be a situation where question doesn't specify any method. Question will either specify a method or they will hint upon a particular method. Either of the two situations will definitely happen. Please take some session on risk management. Okay, okay.
Sure, sure, sure. As we are getting so much queries for this session, so now we are thinking about continuing with sir for this whole week, from today onwards, today to Saturday onwards. If sir is available, we'll see. Look into this.
Okay, okay. That's a pleasant surprise for me also because I was not even aware about this. So yes, guys, we'll try to help you out as much as possible and we'll take up the key important topics for this particular subject. To learn and prepare Akanksha, you have to do practice questions in writing of this particular subject. There's no other alternative. Practice questions are required to be done in writing for all the topics of this chapter. Okay, so thanks a lot for this session, and we'll be meeting in our next session. Hopefully, I'll be keeping you informed through my YouTube channel and through Facebook. And SuperProfs also you can get live on their YouTube channel, and we'll be keeping you informed.
Thank you, sir. Thank you very much.
Thank you so much. All the very best and happy studying.